Good morning, this is Larry Edelson for my Uncommon Wisdom video for Thursday, October 14th. Wow, we've got a lot of market action, especially in my favorite markets, gold, and in the stocks lately, and in the dollar, of course. Now, what we've seen this week is on Tuesday, the Federal Reserve announced the minutes of its September meeting. And not surprisingly, as I've been telling you all along, the Fed is getting more and more aggressive. It is ready to not only print boatloads of fiat dollars, but it is also starting to consider targeting boosting overall inflation levels. And in another sense, that is really nothing more than openly admitting that the U.S. dollar is going to be systematically devalued by the Federal Reserve to boost general price levels and target inflation. We've also seen currency wars begin to break out as other countries are getting very concerned about their currencies going up in value too much against the dollar and hurting their exports and importing into their economies deflation. So we are now in the beginning phase of a full-scale monetary system breakdown, and one that will drive gold much, much higher and have incredible impact on virtually all markets. Let's go right now to the gold chart. This is the chart I've been following for you and showing you for the last several weeks as we've been scrutinizing the gold market very closely. Last week we had a record high in gold, an all-time record high. Early this week in white holiday trading, Monday, Tuesday, and Wednesday, the market dropped down a little bit. But now, on the news of the Federal Reserve targeting inflation and basically officially devaluing the dollar, gold is making another break out of the upside of this channel and is going to, more likely than not, head to yet another set of new record highs. This line here that you see at roughly a 45-degree angle that I've put on the chart is a cyclical projection line. It gives you a guide to where the next resistance levels are in gold. You can see that over the next few weeks or so, gold could easily break through the $1,400 level to $1,450. That is most likely the area that will see this market top out temporarily. We will then see probably a pretty sizable pullback at some point in the future. But as you can see from this horizontal blue shaded rectangle I've drawn for you, massive support is now plateauing and creating a support shelf at around the 1250 to 1150 level. So in the worst case, I would not expect gold to fall below 1150 on any major correction. Having said that, I'm looking for 1400 to 1450 over the next few weeks, and then we'll take it from there. Longer term, as you know, I'm expecting gold prices to double to well over $2,300 an ounce. Let's now look at the dollar. The dollar is absolutely getting creamed on this news from the Federal Reserve. You can see here that it's literally falling right out of bed. This area down here is where the dollar did try to find support. However, it is underneath these massive resistance areas here, and you can see there's nothing but white space on this chart underneath the dollar index. The dollar could go into a free fall here, and I'm watching it very, very closely. I would not be surprised at all that if we take out the March 2009 low in the dollar index, which is around 74, just about 0.3% or so lower from here, that the dollar goes into crash mode. Let's now take a look at the Dow Jones Industrials. Not surprisingly, the Dow is holding up rather well under the various pressures that are occurring in the currency markets. And that is because longer term, as I've told you, stocks can act as an inflation hedge just like other natural resources and other tangible assets can. You'll see here we have gotten above Dow 11,000, which I forecast. We're going to run into some resistance around 11,158 and 11,256. But if the Dow should close and break out above the 11,256 level at any point, in the next few weeks or so on this cycle, we could see the Dow go pretty much vertical all the way up to 12,000. I do not expect that at this point. I do believe that the Dow will top out somewhere between here, 11,000 and change, and 11,250 and change, and then, as the cycles have been warning all along, roll over to the downside with a sharp decline, perhaps right after the midterm elections, going into the 9,000, 8,700 level. Now, another thing, I have Rudy with me again today because the dollar devaluation that is going on, as I mentioned earlier, is sending a lot of capital into emerging market economies. So with that, let me turn this over to Rudy, who's going to give you an update on what's happening in emerging market economies. Till next week, this is Larry.
Hi, Larry. Yes, there's no question the Fed's comments this week are critically important. For the first time ever, the Fed is actually going to target a higher inflation rate and effectively devalue the dollar. So naturally, capital is now rushing into the hottest emerging markets more than ever before. Just consider what's going on in Southeast Asian countries like the Philippines and Indonesia. In the Philippines, that market there has gone up to an intraday high of 42.45 last week. That's up 36% year to date. According to the Philippine Central Bank, more than $1 billion was invested in the country in a recent two-week period, a record and more than 9 times higher than the same period last year. And the story is much the same in Indonesia. Capital inflows are pushing the Jakarta stock price index to new record highs, up 40% since the beginning of the year. We're also seeing bond markets explode higher in Indonesia, with the benchmark 10-year note yielding 7.8%. Now, that's the lowest since Bloomberg started tracking Indonesia's sovereign debt markets. Global fund managers have now increased their holdings of Indonesian bonds by 64% to nearly $20 billion. We all need to keep in mind that while the US and Europe sink, while the Federal Reserve deliberately devalues the dollar, the emerging markets of Latin America and Southeast Asia are exploding higher. Now, together, the 10 member countries of the Association of Southeast Asian Nations represent nearly 9% of the world's population. That's 600 million people. Let's put that in context. That's roughly double that of the United States, and that's about 1 out of 11 people in the world. Now, that's a huge market, and there's some great ETF investments to get in on this, like the iShares MSCI Indonesia ETF, symbol IDX, or that new one, the new iShares Philippine ETF, symbol EIDO. Thing is, I think we're still just at the beginning phase of the explosive growth in these emerging markets. These markets are like where China was a decade ago. They are not without risk, though, but there's tons of money to be made in them. Thanks again, Larry. I'm looking forward to your new Real Wealth report that goes to press this Friday. And thank you all for watching.